Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Today, we're talking about Venmo. All right. And so even though this question was specific with Venmo, you can really apply this to all of the other different types of payment processors. So there's Venmo, there's Stripe, there's Cash App, there's PayPal. There's so many different payment processors out there, and there are new ones that are popping up every day. Okay. And so the question then becomes, well, do they report to the IRS? All right. Now, there's a couple of things that you need to be aware of here. So as a payment processors are required to report to the IRS. And this is, we're talking about a 1099K. Okay. So it's 200 transactions and $20,000. So those are the two thresholds that must be met. However, that does not mean that the income that you receive via these payment processors is not taxable. All right. That means that, they just may not send those reports, but that income, if it's, for a product or service, we're not talking about, Susie owes you $20 and she just paid you on Venmo. That is not a taxable event. But if you're getting paid for your products and services for your business using a payment processor like Venmo, yes, that income is taxable, even if they have not met the threshold. Now, understand too that I think it's Massachusetts and Vermont are the two states that have recently reduced that threshold to now $600. So they don't care how many transactions, but at $600, the states are finding out about it. So it's not just the federal government. They're sending that to the states. So the main thing that I want to get across here is to please be wary of trying to dodge paying taxes, okay? Because usually that's what happens. We get a new payment processor, we get a new tool, tips, tricks, and we want to know, okay, does this go to the IRS? But it's usually not in the context of, really just trying to understand how it works. It's how do I avoid paying taxes? Now, the thing that you have to understand is tax avoidance is legal. Tax evasion is not legal. Tax evasion is when you have a tax bill that you owe, you owe, and you don't pay. Or you have income that you should be reporting and you don't. Those are illegal acts, okay? And a lot of times people don't, they don't report the income because they don't want to pay the taxes. Well, nobody wants to pay the taxes. And so you have to just determine if you want to, you do the whole crapshoot with being discovered and, found out and then having the IRS come for you. That's the only thing. That's really what this boils down to. Now, if you come to me, I'm going to tell you what the law is and you make your own decisions. But I'm not the hide your cash kind of girl. I'm going to tell you the legal ways to avoid paying taxes, not help you commit tax evasion. That is out. Okay. So when you're dealing with with different payment processors, that is the general guideline. 200 transactions, $20,000. Now, here's the other thing that I want you to keep in mind, because what people do is they say, okay, I've gotten to about $19,000 over here, so I'm going to switch to this other payment processor to accept my payment. So it's not reported to the IRS. That is called structuring, and that is illegal. Okay. Structuring is when you intentionally stay with under a specific threshold to avoid being detected by the government. Okay. The most recent case I heard of this is, what's the kid from Jersey Shore? I think I don't watch the show, but it's a kid, him and his brother from Jersey Shore. They recently went to jail for structuring. And what they were doing is that they were going to different banks and depositing under the $10,000 cash threshold. And so just in case you don't know what that is, that means that, so when you are dealing with cash, if you receive over, $10,000 or more in cash, like cash money, If you receive that, then you have to report that to the government. But what they were doing was depositing like 9,000 here and 6,000 there and 8,000 over here, right? To avoid those reports. Well, guess what? They got busted. So that's structuring and that's illegal. So when you're dealing with these payment processors and, how you're getting paid and all of that, dude, just set aside the money for taxes. There are so many ways to legally avoid paying taxes, that trying to do stuff that's against the law is just dumb. Okay. Right. Because see, then once you get found out, when you have to pay the piper, it's not cute. Right. DMX was another one. He, was trying to operate in cash to avoid being detected and paying cashes. That's why he's in jail. Okay. So yeah, so that's the deal when it comes down to payment processors. 200 transactions and $20,000, meeting both of those, except for in the states of Massachusetts and Vermont, I do believe, where those get reported at $600. Okay. So I really hope this helps you out. But regardless of the amount that you receive, if it's for your products and services for your business, that income is taxable. It's not just, hey, I'm sending, $30 to my sister so she can go to lunch or something like that. All right. So really hope that helps you out. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day. I'll see y'all next time. Bye.